The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Got a little late start this morning. Skype, you got to love it. Sometimes you have to, it forces you to reboot the computer. How about that? Take a look at the 10-year really quick. This has been, that's the 30-year, excuse me. Let's get the 10-year up. We don't trade the 30-year. It's too scary. Just kidding. This has been something, we've talked about quite a bit. That is it Betty good to be long this thing? Yes. We've given the argument that, market goes north, 10-year goes sideways, market goes south a little bit, 10-year blows a gasket and goes straight up. So, again, proving that point and that concept. We are into the 132 area. I actually reached a high on the September contract of 132.07. Let me make sure. Make sure we're on the right chart here. Okay. And as we look at this, there's really no end in sight. There's no turnaround situations. Here's the 240 regulating that trade up on the 10-year. And again, I don't see a lot of reasons to take this trade off still. This is kind of one of those let the fine wine breathe situations. And let's go right into the S&Ps. As we look at this, we looked at 2075 into 2077 yesterday as a big area of concern. There's the weekly unfair high on the S&Ps. If I go into the scanner, I'll see the same thing. As far as the inflection points, and obviously a little snapshot chart there, but there's that 2077. So at 77 to 75, kind of a Custer's last stance for the S&Ps. And what I was looking at yesterday is as we were going down into those inflection points, the daily breaths calculation that we have in the scanner, and I'm just going to pull this up, this really started getting negative as we were around, what was it, if you guys were watching 2082, 2080, the internals started to kind of eclipse here. So as we were coming down into this DMC, we had a mixed bag. And, with the volatility, I was factoring in a couple of things, the volatility aspect of things like we talked about yesterday with Steve Banger, and a couple other things going on the planet, gold going through the roof. The risk was, in my opinion, to try to buy that inflection point area. Because you didn't have a lot of clear signals. The internals are starting to roll over. Obviously, this 60 minutes been just powering down. So, what do you do with this now? I talked specifically yesterday about waiting for a move below 2075, 2077, and being on the short side. As we look at this now, we don't have a lot to hang on to down here. There's no 240 information, no daily, no weekly. You've got a POC around 2053. We've reached a low of 2060. So I think we've got a little bit farther to go down. And what do you do with this? I think you sell rallies on this. In the intermediate, we could actually continue to explore this fair auction easily down to 2009. And when we get down there, if we've got our breath on the weekly and daily negative, you're not supposed to be buying that. So can we move down lower? Yes. I mean, do the T-notes really tell the story a lot of times? Yes. Is there a global slowdown on the horizon and in force right now? Probably. That's not something that bodes well for stocks. And, being on these all-time highs, I mean, of course, we've got a lot of announcements coming out this week. The dovish comments save the day again. Does the market like slowdown because rates are going to go lower? That's been the course of action. But at some point, just like when you have sector rotation, okay, let's just say the utilities are flying and the tech sector's not. at some point those things rotate and it becomes a relative strength play that turns into a sector rotation. So we may have that type of atmosphere right now when it comes to looking at the U.S. stock market relative to what's going on. And at some point, the market not liking dovish comments. So we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We were just kind of talking about the notes and the S&Ps before we left here, and just want to cover the usual suspects, kind of bounce around a little bit here before we get into any individual stocks. We're going to take a look at Alibaba a little bit later. What's the deal on that one? Crude oil, well, had a little bit of a bounce yesterday off that number we talked about, 48.14, but we're crowding back down into it. This looks like we're going to do a flush here, folks. So when we start moving down below 48.14, I think you can play that using a little defense against that 48.14 area. we're sitting right on support right now, and that 48.14 combines with that POC on a new weekly bar 48.11 here. But ultimately, I think 45.73, that 46 area, that we were just completely wrong on the pullback earlier on crude oil. I think we ultimately can get down into that 46 area on the July contract. So, and I was expecting a pullback a lot sooner than now, but that's something. What is that? $2, $2.50 a barrel. I think we can easily explore this fair auction down into 45.73. So, global slowdown, dollar related, dollar obviously pricing itself higher. So commodities may have to price themselves lower by default here, but I want you to take a look at this. This is, what we talked about yesterday. The support now is 94.39.40. We came down and hit that neighborhood, and we're getting the heck away from it now. So the close above, go back and retest, and we are moving away. So that's very bullish. That's very important that we're having that type of action right now. And again, this is September contract. So here's the weekly. And, we talked about the retracement back up into this, ultimately maybe even getting into 98 now. But we talked about playing defense below 94.39.40 yesterday. That worked out. A lot of commodities like the crude we just talked about, I think, are going to just kind of scale down here a little bit. You got a lot of factors pointing in that direction right now. But here's gold. This is one we just talked about not being able to short. And I don't like how this thing's crowding. If you're looking at this from the short side, crowding again into this 2086. We talked about not shorting this. This is kind of just where you have to take some weight off. But a weekly close above there, then you'll be able to use that support. Right now, it's just kind of a wait and see on gold. That's the situation there. So let's take a look at a couple other things here. We've got to take a look at the DAX. The Bund, as somebody said in the den, is below zero this morning. I felt like there's going to be some music after I said that. But, don't try to catch. I'm sorry, that's the DAX. Good Lord. We're going to go to the Bund in a second. The Bund is, this thing can go a lot higher. Don't think that just because we've gotten below zero rates that the party might be over. Again, it's where you haven't discovered some magical event that nobody else sees. It's not too high. So just wait for the inflection points to play defense against if you're going to take that attitude. But at some point it will be an area probably to buy support again. I'm not really looking at something like that. I've learned my lesson on trying to pick tops, and you got to keep turning the rents the same way until the party's over, no matter how nonsensical it is. So as we look at the DAX, we talked about this 10,000 area, 10,180 on the September contract. That was broken. There's nothing in sight down here to try to buy this. And again, it may bounce, but again, let somebody else be the hero. We can't play defense against any level right here. Here's the 240s. There's just nothing to lean on. So therefore, it's pretty far in the hole. It's not something I'd like to short, and obviously not something I'd like to buy right now. All right, let's hit a couple of currencies really quick. And the euro. This is one I was really, really happy to see this. I personally have a trade on this one, which is kind of cool. Against this 112.94.95 area. And again, this is really like coupled with that dollar trade. We talked about the euro hopefully retracing back up into this 112.94.95. At the same time, that dollar was at the, what was it? Just talked about it. Silence. The dollar was at this, kind of coming down into this 94.40, 94.39. At the same time, the euro was showing this retracement back up in its kind of breakdown, former resistance or former support, now resistance type thing. and it all worked out great. I mean, I'm actually, sometimes when you wake up in the morning and you've got your stops in and you're kind of looking at the screen like this, I wonder what happened. This was one of the ones where you take your eyes off and you're actually happy. So for me, I think we could actually head lower on this, and the lower would be 111.43.44 ultimately on this, and that's the way the euro's bouncing. Kind of like this a little bit better than being long the dollar actually, but they were right in the inverse wheelhouse. So Canadian dollar again getting a little bit devalued here, but nothing to write home about. The thing I really like about this is we're getting above this daily profile again. 128.50. If we get a daily close above there, I really like crude oil revisiting the 46 general area. These are usually, can I use a word that I'm not, let's see, harbinger of bad news. Here's the XLE. The cool thing is on this one too, when it comes to oil, got some overhanging supply trying to happen here. It's only Tuesday. 67.17 pre-market looks like we're 66.78. So again, I think this thing could revisit 65.27 easily. My screen's locked up. Yep, there it goes. And I think this support around 66.47 is just going to be blown through, and that's the deal in the XLE. All right, November beans. Okay, they John from Philadelphia. We got a new profile attempting to appear here. This is kind of a wait and see. This is where you're definitely clearly looking to kind of sit on the sidelines for a little while. We got below our 240, kind of regulation of the trade up yesterday, got below 1154. So again, it was buy support, buy support, buy support forever on this trade, as you can see. And now we have to just sit tight. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Who's an investor in LinkedIn? You guys are buying the beer today. We got retail sales at 8:30 here. We're going to take a look at the 10-year really quick. Do we have that out? Yeah, I think we do. Let's take a look at this 10-year. Nothing major. You guys see my screen? Just making sure. Okay. Okay. Here we go. All right. So not a big reaction. I'm just making sure we're retail sales, import prices. Yeah. Yeah. Kind of muted there. All right. Cool. Alrighty. Let's take a look at Microsoft. All right. So I'll tell you what, we do a lot of programming, and David White has probably already gone through this ad nauseum on his show in the afternoon. I know he's a big Microsoft fan. If he's not, I'm sure he may send me a card in the mail. But they've got this, I don't know if you guys have looked into this. Look up Microsoft Dynamics. We're starting to get a lot of jobs relative to that. If you run a business, it's one of the coolest things I've ever seen, actually. It combines, you have a lot of times you have disjointed products. I'm not trying to advertise Microsoft today. I just think it's pretty cool. And I think it's going to carry this company a long way, actually, moving forward in the B2B area. So as we look at different CRMs patching together Sugar, which is a kind of an open source development CRM, you can do a lot with it. Patching in Active Collab or some project management software, or email, blah blah blah. I mean, Microsoft has kind of put all this together for a nice pipeline situation in Microsoft Dynamics. If you want to just look it up online sometime, take a look at it. You might be able to get a free trial. But they've made it very easy for a developer to deal with and change. It's kind of like Java of the old days when you have these libraries and you kind of patch together code that's already written. It's really easy to mess with. So I'll stop talking about that. So here's Microsoft. I know you guys know about the LinkedIn news. So as we look at Microsoft, not a terribly bad reaction, spending $29 billion. But here's Microsoft. So again, it's kind of, I think you got to wait and see a little bit and play. You can play against this 50 area. And but I kind of genuinely think the market in general is just going to kind of fade off a little bit here. So, it's not exactly that exciting to buy this at this stage. I think you got to kind of use a wait and see attitude on a lot of different things when it comes to equities right now. Let's take a look at the 10-year. How we doing there? And just still sitting around the same place. S&P's sitting around the same place. No big reaction there. Let's take a look at Alibaba. All right. So 76.85 this morning, got a little bit of a bounce. This particular stock, this is what we talked about looking for. Looks like we might have a little bit of support here, but again, it's an equity, and I don't think we're gonna have a lot of fanfare right now with equities. But put a gun to my head, it's not a bad support area to look at Alibaba to play defense. Okay, we're gonna look at July wheat real quick. Got a request on that. Just to completely depart from the equities for a second. So, all right, so this is kind of a cool setup, and I'm glad somebody brought this up. We've had that weekly close above. The powerful trades usually are these retests. So right now, you've got an unfair high on the weekly around 489 a bushel. God, I can't even say that. It's like unbelievable that wheat's that cheap. And then you've got 470, 487. So again, that 490 general neighborhood has been hit and bounced a little bit this morning. I like this trade from the long side very much. Here's the daily chart. 483. Thanks for bringing it to our attention. 487, 489. You got dual time frame confluence there. I'm going to pull this up in the scanner really quick. I'm going to go to the futures section. And I'm trying to keep people from getting seasick as I move this thing around really quick. So here's the July wheat situation. So as you see there, there's the top, there's the bottom. Okay? So that's what we're seeing on the chart. And when we go in here to look at the level of the marketplace, there's the 489, here's the 487. And you've closed above in the weekly, you come back and retested this. Very nice setup for longs with stops below 87 based on your appetite for risk. And John from Philadelphia, we usually don't talk about wheat. Thanks for bringing that up. That is a high probability trade. There's gold sitting at the top of that profile like we talked about. Let me just point out where so just a smidge above 1286. Not interested in going short gold right now. There's the daily on crude. I think we got a little bit more to go on crude there. All right. So we haven't looked at silver in a while. I just want to hit this really quick. This is the July contract. And again, I think on silver, you've got a situation where you don't want to be short this thing. And the recent support we've used is POC 1709. I think we could head a little bit higher here on silver. So again, there's nothing really standing in the way. No daily profiles to worry about. And the long-term trade, I think, is still north on silver. Taking a look at the XLF, this is one I've been just kind of pounding the desk about just not being long. There's better longs out there. The 10-year situation is starting to creep into this, along with the broad market in general. Even though Jamie Dimon can seemingly, with his bank in particular, he's decriminalized criminal activity somehow in the face of the regulators. And if you can make 30 billion and pay a fine for 20 billion to make the 10 billion, then the math kind of works out. So I commend him for actually figuring that equation out. Is it right? Not really. I'm just kidding. I'm sure he's a nice guy in another life. Here we go. So the XLF, we've got ultimate pullbacks on this one at 22. We're trading 22.91 on this. I think that's where you kind of look at this as a big pop area. But again, I think the market's going to drag a lot of things down right now. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay. POLR. Are you talking about David White? John from Philadelphia? You said he in the Tech Insider? Okay, great. Well, you got some incredible insight. Oh, POLR. Okay. I'm sorry. POLR. Gotcha. I didn't know that was David's handle. My God, why didn't I know that? He's not in there right now. Okay. I'll have to read that. You know, I love watching David's show, by the way, David White. It's just incredibly insightful. Path of Least Resistance. Okay. I'm starting to put 2 and 3 together here. I'm sorry. So what I've got up here in the scanner is I wanted to kind of do a on the precipice of a cliff setup here. So I just chose bottom and bottom out of the S&P 500. There's 4 stocks that are meeting this criteria right now. And these are ones that are on the edge of the cliff, right? So when I look at Goodyear Tire and Rubber, get that up again here. Unfair lows sitting on the bottom. You could look at this as, wow, we're on all-time support. Unfair lows on the weekly. But, you know, I'm looking at it as, you know, we've been crowding this thing for a while. This is our weekly. The market's looking kind of heavy. You may be able to kind of whack this for a couple of points as some folks will start exiting those types of trades. Here's Marriott International. There's the daily. There's the weekly. You know, Nah, that's not the best one. But Cardinal Health looks really heavy, but it's in a sector, XLV. If we go back into the ETF section and we look at the daily on the XLV, and remember, a lot of these things were just go green not too long ago. They started shifting over without question. So the XLV, so if I want to find the stocks that are just, doing quite well still, I can look at some really outstanding little situations here. Boston Scientific, man, thanks for telling me now. But as we look at this, if I go over here and I say, okay, well, sitting at the bottom of a cliff here on the weekly. So you put some things on the radar screen. There's the Cardinal Health situation, bottom, looking kind of scary. Yeah, just put some ideas in your head. I mean, we could do a zillion different sorts here, different combinations. One of the things I like to do, when the market's going up, is take, a situation and say, what, this, obviously the market's not going up right now, but kind of sitting on all-time highs. I want to see a lot of times, what's forming new profiles above here, and we've got it on the daily and the weekly. So Pfizer is something that's just been ultra strong, and now once you start getting those indications, and I think we started getting those yesterday. We had them on the weekly, I think yesterday too, but it just lets you know, look, we're probably going to have some new inflection points. You may be able to buy support a little bit lower. Again, it's like that trailing stop situation along with the lower term time frames. And that's just what I like about it. And if you want to find, I'm getting too comfortable here, I'm sorry. If you want to find, things that are setting up to take profits like that, and you can read into this a lot of different ways when something's maybe designed to take profits. If I go to profit taking, then what it does is it puts these peelbacks yellow or excuse me, let me do this. Hold on. Let me go back to the dashboard. I think we were just in the XLA sector. So if I go to profit taking, that was on the XLV sector a while ago. I apologize for that. You got a lot of stocks that are kind of in the same wheelhouse here. There's Pfizer with the double yellow. Walmart stores. Let me take a look at this one. There's the daily. There's the weekly. CME Group. Yeah. Yeah, so CME Group, I actually like this setup. I like the resistance at 95.90 on this and playing defense above. But going back to the dashboard, we're going to take a look at Apple really quick here. So, and I'm going to go to eSignal. Thank God for leaving it on, and I didn't pay the bill yet. We talked about waiting until 98.64 was breached. So we talked about not looking at this as buy support because we thought the market was going to pull back in general. So Apple now has gotten back in the fair auction, got some headwinds, obviously. And when we're looking at the weekly, we talked about, okay, we're still in a downtrend. Let's just kind of wait until we have a chance to play defense below 98.64. That's happened now. And I think you can lean against that. Your initial targets were 96.43, but I actually think we're going to go much lower than that. We used that as support before, but I think we're going to actually eclipse the 96.43 on Apple. Sorry about that. All right. So we're going to take a look at Netflix really quick. Is this stock getting off the radar screen finally? So here's the situation on Netflix. 96.18. We got the weekly close below it last week. We came back and retested. I think it's completely in order for this thing to revisit the 88.35 area, especially after that action tomorrow. Get below 94.58, 96.18. So now you got a chance to play defense above that DMZ, and I think we could actually get some momentum and hit 88.35 easily. S&Ps are kind of continuing to just kind of slough off here. Remember, 2053.40 is going to be a little bit of a target area and possible trading bounce situation. In the scanner, you do have the internals right here in front of you, and the dailies and the weeklies are pretty mixed. If you hit Taz says up there, it says long-term breaths in conflict with intermediate breath. Although the long-term broad march direction is still favored as long as he's taken with caution, considering the divergence in place, non-directional, temporary, blah, blah, blah. So you can read that. You can also get the inflection points like I just spoke of, 2053.40. And they're great places to pick battles. I can't, for the life of me, do some of the stupid things I used to in the past with the scanner and with some of this information, because it for me, it blocks out one side of the marketplace, and I hope it does it for you. It makes it easy to only buy support, buy breakouts, or sell resistance, sell breakdowns. So it puts those two things in my mind, and I'm not sitting here intraday going, oh, wow, I could make some points here if I scout this or blah, blah, blah. So I'm always trading with the MO of the long-term trend or the power of the profiles. I'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
You know, I got to tell you, when you guys were saying POLR earlier, I didn't put 2 and 3 together and path of least resistance. I was thinking about this symbol, and I'd pulled it up on something else. And I was like, what is going on? Why are they mentioning POLR? So David's acronym, if you pull it into a chart, just want to let you know, it's trading zero. I don't know if that means anything. Just letting you know. David, we love you. Anyway. Got the crickets again. And in the den, all the people are responding. Man, I love doing this show. The den is great. It's my favorite part of the day, by the way. Amazon. It may be the most painful part of your day, but I love it. Love it. Here's Amazon. 720. And it's difficult to do this from the road, and I apologize for, not being completely excited when I'm on the road. It's not sleeping in your own bed, blah, blah, blah. You know how that goes. You're taking half a bottles of Metamucil at a time. Here we go, 7:15. Yesterday's close on Amazon. Got the new profile attempting to appear. This is the only time I would say on Amazon that I would be, hey, we need to sit tight now. We've got the long-term indication. That in itself actually is wild because you got back below 722. That was kind of the stop for me. I mean, I'm not trading this, but as I'm following this, below 722 was where we were talking about trying to buy this thing. But we talked about the market being kind of heavy, might be a wait and see. Now you've got a weekly profile there that's going to give you some much more impacting levels. So again, this is you can trade this down to 695. And play defense against above 722. That's a decent little risk reward scenario. This morning we're trading 714. So, put a gun to my head. I'd like to trade the retracement on this, but it's a risky trade. I mean, you've got much better shorts out there than looking at Amazon like, hey, I'm finally going to be a big winner and short Amazon and actually make 1 point. So. Again, keep it in mind that the scanner can find you much better shorts out there, and it's just as easy as clicking some buttons actually. And this area here, the strong downtrend resistance, these are ones that have kind of popped their head up into resistance. But again, you want to look at these when the market's going up, and try to catch them early. Right now, there's the Cardinal Health. Simon Property Group. Let's take a look at this one. There's the daily. I think you got better shorts out there than that one. Here's the breakdown situation. And wow, man, imagine that. We had quite a few breakdowns. But these breakdowns are relative to profiles and mainly daily and weekly profiles. So again, we can't put every time frame spin on this. We just kind of primarily focused on weekly and daily, and it's very simple when stocks are breaking below profiles. So you got BWA here. This is you can see it really quick in the XLY, breaking down on the daily there. Get a chance to play defense. Here's one that's breaking down on the daily and weekly, Delta Airlines. Oh my goodness. Here we go. You're going to hear the flush sound on this one. And this one is one where you can really play some cool defense. Was looking heavy before the market pulled this stunt. This is one of those edge of the cliff deals, and then the market kind of gave it the oomph to get below these levels, and we could be in store for more of a ride down. Stay tuned, guys. I'm going to go drink some coffee. Bye.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.